Hi guys, thanks for tuning in to another episode of Nuggets News. Well, we've cracked 80,000 subscribers, 1,000 new subscribers this week, and I want to thank everyone that's been with us since the start a few years ago, as well as everyone that has joined us recently. And a bit of a goal of mine is to get to that 100,000 mark, not because of the number itself, but more the volume of people that it represents that we've got the education to, without doing too many, clickbaity headlines and whatnot. I think we've attracted a great caliber of subscriber compared to a lot of channels out there. And I guess it's a credit to you guys who do tune in every week and who have been furthering your macro and financial crypto education along with me and the team as we try and bring you the best education. If you've got your friends and family that are interested, don't forget we're continuing to add to these modules. This is all free on our website, nuggetsnews.com.au. Everything you need to know about wallets this week. So head over there and check out all our free stuff. And obviously, if you want a little bit more, if you want to become part of my inner circle and get my daily updates and all our extra research, you can become a member. That's $50 a month, around $30 US a month, and obviously cheaper if you sign up longer term. I just want to take a quick moment to mention Anzac Day, a very different Anzac Day yesterday. It's a fantastic day, and I actually watched 1917 last night. That is probably the best movie I've seen in many years. Quite fitting, and I guess we just forget how good we do have things and how lucky we are a lot of the time. And I think the world can always get better and head in a better direction than what it necessarily is at the moment. And I guess that's why we do everything that we do here at Nuggets News as well. Finally, I just want to give a big shout out, thank you to my team. Most of you will probably know we've been expanding, 6 full-time. I think we've got 13 altogether now, with the casuals and whatnot. And it's just amazing. We've got 3 more partners. Over on the website, you'll see all the partners that we have discounts for you guys and whatnot. So welcome a couple more partners, and Ben has been leading the charge. It's been about adaptability. Everyone's working from home. Just as we got that new office in Melbourne, all of a sudden everyone has to work from distance. So, we're not immune to it like everyone else out there. Finally, big thank you to our sponsors. They allow us to do all this. FTX have actually added oil. Now, there's a lot to cover in this week's episode about oil and particularly trading of oil. So fantastic to see that they continue to list the products and things that people want to trade. And obviously, there's a link down below to get you guys a double discount on fees. And we'll continue to work with them to get better deals, promotions. And I know there's a lot of exciting stuff coming up in Australia, and I won't give too much more away there. Okay, let's get into the local news. Obviously, Virgin has gone into receivership. Airlines are struggling all around the world. Whatever happens here is going to set the tone for other businesses in terms of bailouts and whatnot as well. We do rely heavily on tourism, so that is one where you really need to watch this space. Plenty of people had their Virgin points. They've got a lot of staff that are wondering what's going to happen now. So, let's hope for a good outcome. We do need 2 airlines in Australia to be competitive. Now, a lot of employees have been talking about this from Qantas and other companies as well. I don't want to pick on Qantas, but this JobKeeper and the payments where companies have to pass that on to the employer. That's just the law at the moment. And a lot of these companies are saying, well, no, we did this, that, or the other, or, you had this other work-related expense, so we're not passing on some of the payment. And some employees here getting left with $5 out of the $1,500. So I think there's going to be plenty of fallout from everything that's happening here. And let me know down below if you've heard any of those stories with what's going on with those payments there. In terms of what people have spent their payments on, we know that groceries this week, consumer staples, things that people want to buy at the supermarket, we've seen a huge surge in terms of that supermarket spending. But a lot of people have actually not spent it or saved it, just like we saw when we got that bit of the tax rebate from the government. A lot of people are using it to pay down their debt. Now, this was a good piece from the Kook. He spoke about how we actually get more economic growth when we distribute the wealthy to the poor instead of the rich. Those people, it's a far bigger margin for them to have an extra $100 than it is to give to the rich. They go out and they spend it. So, look, we continue to bail out the top end of town. We're hearing all these stories about the bottom end of town and people falling through the cracks in terms of the stimulus and the checks and whatnot. But I think everything that we're doing here is really calling into question the need for this huge reform, something that's been on the agenda for a long time. But there's no doubt that governments around the world are going to have to really shake things up, think about how they're going to get that economy accelerating if things aren't the same. If tourism is never quite the same again, we have to make up for that elsewhere. Scott Morrison has taken a bit of a swipe at the big banks. This is a problem we've seen all over the globe, where I scratch my head and I wonder, if you're going to tell everyone they're not allowed to work, you need to give money to everyone that you've told they're not allowed to work. We're going about in this roundabout way where they're sort of giving it to the banks are giving it to the employer, then the employer's got to choose to give it to that person. It causes friction. The banks want to make money out of this. We've got the businesses that aren't doing the right thing, as we just mentioned. I just wish that the government would go about it like other countries have and just given it direct to people. And that's obviously something that the distributed ledgers, cryptocurrencies and blockchains can really help with. That technology isn't quite there yet in Australia though. Okay. Now, one of the things that's really kept Australia from avoiding recession is that population growth, particularly from immigration. Now, that is really going to slow down. Now, that's going to hit everything from the job market to housing, and Sydney's population in particular, who had one of the biggest growth rates. And these are the reasons why I'm not so sure that property is going to rebound. And I'm really looking forward to having on Chris Joy, who's put out his really bullish predictions about housing going up 20 or 30% this week. I'm going to have him on the podcast, have a bit of a maybe friendly debate and great chat. He's a really smart guy. Now, the property index, this is the daily index that we've been told housing's going up every day. All of a sudden, they've decided that they're not going to share that information anymore. So it's funny how these things work. We've seen companies do this and stop sharing their sales and earnings projections. It's all well and good when things are going up, and as soon as things start to turn down, everyone tries to hide those stats. Now, despite all that, people have been asking me, why has the Aussie dollar been fairly strong of late? So look, in terms of government stimulus, dollars per GDP, ours is sort of mid to upper range there, but I think it's really the fact that we've got on top of that curve really, really quickly compared to other countries. The Aussie dollar's been drifting higher. That's good for certain things that we'll get to in a sec, but it is bad for our exports that we really rely on. And we've seen other countries talk about these bazookas and unlimited money printing, whereas the RBA were really slow to cut rates, and they've sort of said that we don't want to go to zero and not negative, and they've already sort of tapered back QE, which the Fed is talking about as well. But I just think Philip Lowe is not as an aggressive central banker as what we're seeing around the world with these whatever it takes sort of policies there. So if that happens, the Aussie dollar is going to continue to drift higher, and that's not good for our exports, but it is good for having to buy all our crude oil and stock up on our inventories there. And with oil prices so low, Australia is going to take advantage of that. I wish we would just maybe stockpile our own resources and commodities. Norway have got that fund. I think Australia should do something similar, but hey. All right, so Gina Reinhardt has helped fund a world-first study into the triple combination therapy you've all heard about, hydroxychloroquine, zinc, and azithromycin, but also including the IV vitamin C. And this is what I love to see. As you guys know, I'm a pharmacist, but I'm all for natural medicine and other approaches, okay? Vitamin C, there's a lot of good studies out there for a range of things now, and I'm really looking forward to seeing how this trial comes out. And just the fact that vitamin C has been taken seriously in a clinical trial and that Australia's leading the way. Healthcare is one of the industries where I think we should be really concentrating, and that could get our economy one of the strongest in the world. Now, because we've flattened that curve, Queensland are even talking about easing their restrictions as soon as Friday. So other countries around the world are commencing these conversations, but a lot of them have still got, the US has still got thousands of people a day dying. So we're in a very lucky position. The debate now turns to, what do we need to do? Does everyone need to wear masks? What businesses can open? What are we going to do if we do have a second wave? What are our treatments, our first line therapies? How long are we going to wait before we open up the next stage? So look, they're the debates that are happening all around the world. And it's really this tracing app that the government have put a lot of weight in at the moment. And I actually, just honestly, I don't think they're going to get 40% of people to download this and fill it out every day. I think it takes 7 to 10 minutes a day. So getting 40% of the nation to do that every day, I just don't think that's going to happen without an incentive. So let's wait and see what else they do there. Now, China has slammed Australia for taking orders from the US. Look, we do tend to cozy up from the US in a lot of ways. I think I said a couple of years ago that eventually we're going to be in this awkward position, economy with China, military relations and whatnot, financial relations with the US. So Australia's going to have to make some tough decisions. Hopefully they can stay neutral, but with tensions heating up, who knows where that's going to head. Kyle Bass has come out. He's been very critical of the CCP in China, the political party over there. They've put a lot of other countries in debt. This is very similar to what the IMF do. And Tanzania actually came out and said that, we're not accepting your terms. We're defaulting on $10 billion of loans. And it was funny, he tweeted this. My mum only messaged me that day. She does some work on and off in Tanzania, helping getting freshwater wells and medications and whatnot over there. And as soon as they sort of defaulted on that debt, China really left them in the lurch there. So no fresh water in the hospitals, no sanitizer, and these are the positions that emerging markets get themselves into when they get indebted and whatnot. And then they leave them hurting with the hope that they'll come back and go in more debt, sell their assets off. It's just a messy situation that these emerging markets are in at the moment with their currencies plunging. Now, China has denied the US's request to access the Wuhan lab. There's multiple requests for multiple labs we're reading now, and obviously they're not going to let them in there and read about it all. So this is where those tensions are going to continue to flare. But the big hack, I broke this news during the week, and a lot of people thought it wasn't true or whatnot, but it gradually made its way to the mainstream a few days later. Emails, addresses, passwords, hundreds of people. I know some of you actually tried to log in and saw firsthand for yourself that they were real. So this is a lot of documents from World Health Organization, the Wuhan lab, and the Gates Foundation that has been constantly, in the rumor mill. And I'm going to get to that in a second. But let's see what comes out of all those documents that people are scouring over at the moment. The FDA have approved a home test kit. There are probably half a dozen or more of these kits that are going to make their way out to the market, and we're going to see really widespread testing. Also testing to see who has been exposed. Now, early studies were poorly constructed, and you might have read that 50 or 100 times many people have been in contact with the virus than we first thought. Look, that is not necessarily accurate data. So until we have widespread testing with really good quality tests, we're not going to have accurate figures there. Now, stocks dumped. Gilead reported that the first stages of the clinical trials for remdesivir, this is another drug that we were hoping, an antiviral drug that would be really effective. The results were pretty underwhelming. So this is why I'm just being a little bit cautious about getting really excited. There's a lot of leads. There's hundreds of studies, but we still don't have anything really definitive. We're getting a lot of mixed results at the moment. Another study has found that the coronavirus mutations are much deadlier than the original disease. Probably the other thing that I've read this week, pouring through all the data, is the fact that we're getting more evidence now that this is a blood disease as well. So it can attack red blood cells, the heme molecule there that carries the oxygen. So it's a bit of a two-phase thing, as attacking the lungs, but also attacking the blood's ability to carry oxygen there. So a lot of questions around whether or not we need just the oxygen and not the ventilators. But again, this is what I keep saying. We just need more evidence. I just mentioned all that there, but it's other organs as well. So when they're doing the autopsies, they're finding high viral loads in other tissues, heart and brain, and particularly the blood that I just mentioned there, as well as obviously the lungs. So there's all these rumors about Bill Gates and creating this digital ID and how this is just completely totalitarian, this surveillance state technology. The immunity passport is not going to be of much benefit if we're getting this evidence that recovered patients are not immune. So there's no evidence so far. This is another article out this week. It's really what we need to wait and see. These countries that are getting second waves, were their first tests false positives? Or did they actually have it and they've got a different strain? Do they have the same strain again and they haven't had any immunity? So this is what remains to be seen. A lot of work to be done. And again, that's why I'm really cautious about these people that just think we're going to be going back to normal in a few weeks with so many unknowns. Now, no real surprises here. PMIs, the purchases for all these big businesses, the outlook's the worst it's been. It's now worse than back in the 2008 GFC in terms of negative earnings per share growth year on year and whatnot. So look, we should be expecting that these numbers are horrible. We know that that's what's happened at the moment. A lot of these food suppliers are being forced to shut down. This is another wave that I think the government is not really considering how bad this could be in terms of the food supply chains and all these processing plants shutting down. Again, a lot of these are exporting food to other countries. A lot of countries are going to be affected, not just the workers at that plant. 40% of residents in San Diego turned to food banks last month. So this is a time when people are starving and we've got all that food that's going to waste, as I spoke about in last week's episode. I just hope that something comes about here and gets fixed. It's going to take a lot of money and some smart people to get this going because the government, they just don't have the manpower or they're not aware of all these things that are breaking down. Now, these millions of unemployed Americans, a lot of them are making more money than what they did working. And we've had these stories come out this week of people that have got the government stimulus and they've rung up their employees and the employees saying, I'm not coming back to work, I'm earning more on the dole. You get to watch your Netflix all day and whatnot. I'm not sure how long you want to be doing that before you go mad, being stuck inside and whatnot, but we see this a lot. It's a debate that's happened before. There's circumstances where people fit into these categories and they earn more doing nothing. So yeah, not really creating an incentive for getting people back to work if you're paying them more money. Netflix has added a record amount of subs because everyone is obviously at home, but their earnings were pretty disappointing. And with the outlook and whatnot there, even with the record numbers. But despite all that, they're offering a junk bond. And guess what? It's 10 times oversubscribed. So they're saying that, we're going to sell $1 billion worth of bonds and investors throw $10 billion at them. That's how desperate people still are for yields at the moment. Another stock that has really pumped, and I said it's overvalued, is Zoom. Facebook have launched their, is it called Facebook Rooms, Messenger Rooms. And originally it's going to have about capacity for 10 people, I think, and then plans to scale it up to 50. But there's plenty of apps. I swear by whereby.com for your video chats and whatnot. But Zoom ramped up, and I think it is going to come undone now as well. So Mnuchin has come out and said that most, if not all, the American economy should be open by the end of summer. So that's still, 5 months away for them. That's the end of our winter Australian time. A long way away compared to what maybe Trump and others are talking about there. So still getting mixed messages. In terms of people that are struggling, a lot of them are unable to get credit cards or make their payments. And so what have the banks done? They've actually dropped the limits. So you can now get a credit card for maybe $500 where you didn't qualify for a $1,000 credit card. Now, a lot of people go out and get 3 or 4 credit cards because they're struggling. Interest rates are still high. Even though rates are at zero, credit card interest rates are still 10, 13, 15% or more in Australia and the US. So mortgage meltdown, all these people are obviously really hurting and not being able to pay their mortgages. They're going into refinance and being told no, but it's even the wealthiest loan applicants that are now being turned down by lenders. This is really important. Banks are going into this mode where they're just taking no risks. So they're trying to recapitalize because they're worried about what is going on. I'm going to get to that at the end as well. Now, Fannie and Freddie have come together. They're going to buy all these loans. Again, it's crazy to think that we're doing another mortgage bailout program and they want to loosen up lending. Like we said, they want to get the banks lending, saying, don't worry, if anything goes wrong, we'll just bail you out. We'll buy it off you, get lending again. And funnily enough, guess who was caught, front running this? So Goldman Sachs, they were buying an enormous amount of mortgage bonds before the official stimulus and bailouts were announced. So whether or not they knew something or the attitude is just these days that the Fed are never going to let anything bad happen, you just buy no matter what and you're going to make money. Goldman Sachs front running there. A record amount of loans have defaulted in April. It approaches 3%. We know that this is happening. I've spoken about it in detail in terms of whether it's mortgages or these companies. We know people just don't have that cash flow to pay off their debts, particularly the energy sector. So this is the North American rigs, Canada and the US, dropping by hundreds in terms of the past month, all these shale oil producers, natural gas and whatnot. This is the interview we did with Marika Tusa where we spoke about this in detail. absolutely fantastic interview. We got him on the day that oil went negative. We are very, very lucky, and that interview was very popular there. And this is going to be a monthly series, so the May Commodities Report. And plenty of you have signed up for Marin's newsletter. It is one of the more expensive ones, but if you're a serious investor that's looking to scoop up gold, silver, oil, uranium stocks, if we head into this recession, we're going to get these bargain prices. I guess that's what he's best known for. And we do have a discount for you guys on the website, and a bigger discount for members. All our member discounts are listed in that learning unit section. Now, one of the things we spoke about was avoiding the USO oil ETF. And I know plenty of people are trading that. We've even spoken about how to trade these things, whether it's eToro or your broker, whatever it is. They're not for long-term holding. It's something that I've repeatedly told you guys because of that drag and the decay. Now, that's got even worse in recent times because of the way they've got to roll these contracts. And it looks like they're going to have to do a reverse stock split. So you're only going to get one share for each 8 you own. That way, if the USO ETF is $2, they're going to reprice it to $16, but you have 8 times less shares, so you have the same amount of money per se. But as I always talk about, if you don't understand a product, you shouldn't be trading it, and that rule applies very much so here. The third largest oil ETN is liquidating. We've heard these horror stories of even USO went into trading halt. Interactive Brokers lost $88 million after that night. This is a once in a lifetime event. So a lot of these people and traders are getting frustrated about higher fees and whatnot, but it's basically every broker out there have had to increase their spreads or put up prices because they can't hedge, or they can't even get you access to the products because they're not trading. So guys, I know it sucks, but you shouldn't be trading these things at the moment if you don't understand them. There's plenty of other opportunities out there. So if you are going to trade, this is probably a time to use the virtual practice account that places like eToro offer. We're still running that promotion where you can get your $100 free Bitcoin, but guys, please use it sensibly. I'm more focused on gold, silver, and the GDX at the moment than trading oil if those spreads and fees and that are higher. All right, so bond ETFs, retail bag holders, just as I spoke about then, the same thing is happening in the bond market where these retail traders are going to buy all these ETFs and just think it mirrors the price. But once there's too many sellers, it just all collapses and comes undone. It's these derivatives. So these aren't the sort of things you want to own. You really want to trade these would be the way that I'd get you to think about them. A fantastic tweet thread from Raul. This is all about what is going on with the rest of the commodity space, where this is going to spread to. I think oil is the canary in the coal mine. So I'm expecting a lot of other things to go down. How I'm going to position myself to trade that, I just think there's going to be opportunities if you raise your US dollar levels and wait to buy these things. Now, the first CLO has failed its AAA over collateralization test. This is the whiteboard video I've got coming up for you guys about the CLOs. Remember, CDOs, collateralized debt obligations, caused the GFC, and they came down like a house of cards. The CLOs are beginning to crumble because of the oil patch, and we've got so many of these that are going to start to fail. And the question now becomes, is the Fed going to continue to bail everyone out? With all these programs they've got, they're talking about reducing their QE program down to $10 billion a day. It was 75 at one stage there. I think they're going to have to fire this back up. They've got to give the money to the Treasury. The Treasury's got to use that for all these 10 different programs they've got to bail out the junk bond space, to bail out corporates, to get lending to banks. Indirectly, the Fed are basically buying all these assets. So when everyone is, fairly bearish at the moment, this is the Sunday sentiment check. Do you think markets have bottomed? Most people think no. Look, I definitely think the Australian market is going to be a lot weaker than the US. I really just wonder if the Fed are going to do whatever it takes in an election year to not let this market make new lows. And at the moment, that would be the contrarian trade there as well. So remains to be seen. We've got to use our technical analysis and put our hats on. I definitely think we're heading lower. We're going to roll over from where we are, but whether or not we make new lows depends on how much money they're going to print. And that's really why investors are just baffled by soaring stocks, even though we're in a recession heading into a depression. Remember, economy, stock market, two very different things these days. All right, heading over to Europe, we've seen unprecedented damage, just like we spoke about in the US. PMIs hammered, exact same thing. Oktoberfest cancelled for the first time since World War II. German hop growers warn of a beer shortage. Again, supply chain issues. The European summit, they were unable to reach this agreement. So, this talk of fiscal austerity, you're not allowed to spend as much, you get a bailout. It's just never going to work. It takes money out of the economy. That's probably the takeaway from the interview we did with Steve Keen. I know people don't agree with everything that Steve says, but he's really onto it in terms of the misunderstanding of economics that the governments and central banks have. I know he doesn't like gold and Bitcoin, but that's what him and I disagree on. So the ECB have joined the party. They have confirmed that they'll accept junk debt as collateral ahead of this downgrade of Italian bonds. So look, Italy, France, these European countries heading to this position where they're probably going to not be able to make their debt payments like a lot of other countries. Germany gets angry because their economy is better. It's just all that friction in Europe that's makes it a lot harder than the US or Australia to print money and bail out this, that, or the other, because you're playing favourites to some degree with these different countries. But either way, the ECB now accepting junk debt as well. Now, the Swiss National Bank have been one of the biggest holders and buyers of stocks. They've taken a bit of a hit. I don't really feel sorry for them at all. The headline of this story was, central banks take big loss, but they've bought stocks with money they've printed out of thin air. Why on earth should we care if they lose money? It's insane to me that they're even allowed to do this. So this is in billions of dollars here. So $4 billion of Apple stock, $3 billion of Microsoft, Amazon, Facebook. It's just the big tech companies. These are all filtered through to the ETFs. It's all fun and games and happy when there's only people buying. But when we start to see these cascades, that's why we get these sharp sell-offs and the market goes into these trading halts. So will other countries join the Swiss National Bank and start buying up these shares in the tune of billions of dollars? That's the question about whether or not stocks are going to be allowed to make new lows. A lot of these mutual funds haven't been able to meet that liquidity and that mismatch. So we've seen 76 mutual funds in Europe were gated. Basically what we saw in Australia, where Host Plus came out and said you're not allowed to sell, you're not even allowed to actually go into cash. You've got to keep your money locked up in our fund. So yeah, the argument about having wealth in your own possession, whether that's physical gold or Bitcoin or whatever, it's just growing stronger and stronger by the day when we see these sort of things. So another French bank suffering huge losses. These banks that are gambling with derivatives products. This is why we need to separate the banks into the mortgage and just safe actions versus the speculation and the derivatives that are blowing up. This is going to be a pattern, and it's starting to look very similar to 2008 with these sort of, I call it financial popcorn. One by one, we're seeing these things just pop and have to be sort of covered by the Fed. So we've seen more civil unrest in France. This is going to continue. It's almost a mathematical certainty. Again, watch that Steve Keen interview. It's going to happen. It's the way the economy is heading, that people are going to be jobless, hungry, and unhappy. Well played to Denmark. These northern European countries that let their banks fail in the last GFC. Once again, they are the ones that are setting the example. Coming out and announcing that companies registered in tax havens won't be eligible for these bailouts. Companies that are paying dividends and doing these big stock buybacks and whatever, they're not going to get any of these aid programs, which is fantastic. I wish more people and countries would do that. Europe are talking about unlocking their economy in May. I think a lot can change between now and then, but let's wait and see. It's these peripheral countries and their currencies that are copping it big time at the moment. Lebanon, he's been slammed over the currency crisis, just like we've seen in Venezuela, where it ends up with these violent food and fuel shortages, because your economy is just not competitive. And printing money can't fix that and bring food into the country no matter what. And they've actually got the oil resources, and there's still shortages because of how badly they've got these structural problems in the economy. So the United Nations have called for trillions of dollars of debt jubilee and forgiveness for these poorest countries. A lot of the time, the IMF gives them these loans. They're not really a bailout because they're a loan. They've got to pay back with interest and whatnot. So debt jubilee, wipe the slate clean. That's what Steve Keen thinks is going to happen. The other alternative is print into oblivion and the central bank just buys everything, which is effectively the same thing because you end up with those debts not on your balance sheet anymore. So all the world central banks are getting together as pressure mounts to do more. I don't really know what more some of these central banks can do. Tens of trillions of dollars it would take to really stop what's coming down the pipeline. They've already printed something like 24 trillion of late. So the Bank of Japan is doing QE unlimited and doubling their corporate bond purchases. Most of these central banks have already promised unlimited printing of money, so I'm not really sure what more they can do. Ray Dalio has written some fantastic pieces lately. He's saying that the dollar has entered its last phase, and there's two theories of thought. You've all heard the dollar milkshake theory, where the US dollar is going to get incredibly strong, and other people that think it's going to collapse because the Fed's going to print so much money. I think we get the strong phase before we get that, deflationary pressure of the dollar. Simon and I spoke about this in great detail. Another absolutely cracking interview. Such a smart guy. 2011 Bitcoin. He's a bit of a whale, but he's also a very smart economist. And this war for the control of money between central banks, the government that are now learning that they can print money and do whatever they like. They don't need the Fed or central banks. And then we've got the retail banks that get to disperse the money in the loans. And again, governments are learning, well, I can just give money directly to my citizens once we have these central bank digital currencies. And that's why the Fed and other central banks, they want to control the currencies. They don't want to let governments realize that they can do this. So I'm going to do another whiteboard video on that. I know it's a bit complicated, but that's the power struggle at the moment. And that's why Trump is saying no to these world monies or a new system. Should we have a special drawing right? Do we need another basket of currencies? Obviously the US dollar gives Trump and the US tremendous privileges. They don't want to lose that. Now, this is all very good for gold. Another precious metals report we put out this week, 13 pages. We're talking specifically about the knock-on effects for all the gold stocks around the world. A bit of a focus on 3 Aussie gold stocks for you guys. But yeah, how they impact in the supply chains, the cost of Aussie dollar gold. Fantastic report. I've partnered up with a guy that's been in the industry for decades to bring you guys these premium reports. So members, you'll get all those emailed to you. They'll also be in the learning unit section. So guys, with all this going on, I know those of you that are looking after your own finances are extremely happy at the moment. Plenty of you have raised your cash levels, gone into gold and silver. You can do your crypto. New Brighton Capital can help you do all of that. Get set up, free consultation, take advantage of that. Mike and the guys over there. We will get Mike back on the channel soon to give you a bit of an update. I know you love the last interview we did with Mike. So yeah, take advantage of that free consultation to see whether or not that is for you. Okay, let's get into the crypto news. So Power Ledger, they continue to power forward with all this good news. They've rolled out another blockchain-based solar trading program in Western Australia, and it's really those emerging market countries where they've got a lot of those trials where I see the bigger opportunity for Power Ledger. That renewable, that green theme, I think they've got a lot in going for them in the next bull market. Binance continue to roll out these different payment options in a range of countries. So the race for payments in Africa heats up. We know that a lot of these countries have already got the sort of phone credits, these cool little apps, but Binance are really going hard after Africa. Bittrex have extended Visa, credit, and debit card on-ramps in another 125 countries. So, I mean, if you're not bullish on I just don't know how you cannot be bullish on crypto. Once things start to turn up and we get those new all-time highs, this sort of thing, 125 countries, phone apps in every country, this number of on-ramps and the amount of money that's going to go into crypto, I just think is going to really surprise people, blow people away. That's why I've got my high targets. Now, Starbucks and McDonald's are rumored to be testing China's digital currency. That got everyone excited last time. I think that is going to get people talking about crypto again. These central bank digital currencies have got nothing to offer. They're never going to be better than the Bitcoins of the world. The volumes have risen again. Now, these headlines can be a little bit misleading when we see volumes hitting all-time highs because of how hyperinflated some of these local currencies have become. Either way, it's good to see more people getting into it of late. Demand for Bitcoin has surged in Argentina. Another debt default looms. They only just issued these 100-year bonds, and it looks like they're already going to default on them. But when we hear these headlines about $15,000 Bitcoin in Lebanon, I think I tweeted at Dan Tapia, who put this out, and I said, look, is that actually the case? Because what we often find is two different prices for the one currency. We have a disparity between the market value and the official peg. So the government will tell you that there's one price, but if you actually have to go into the real economy or try and get your hands on it on the street, it's a far different price. And that's where we get these headlines from. So just be cautious when you read those. It was great to see Argentinian banks are set to use Rootstock. So those that don't know, Rootstock was a company that was trying to build smart contracts on Bitcoin starting 5 or 6 years ago. Hasn't really progressed a lot, and they're starting to come out with some cool little products now. So a bit of a pilot program. Let's see if we can get these smart contracts, a bit of a side chain or a protocol sitting on top of Bitcoin. That's the way you can think of this as. Very cool to see that. And let's hope that a lot of banks end up using Bitcoin to some degree. Stablecoin activity grows at 800%. You guys have seen the numbers. The euro dollar problem, the number of dollars that are outside the US and the demand, this is going to be solved with stablecoins, not by the Fed. That's what makes me so bullish on stablecoins as part of the crypto space. And the majority of this is happening on Ethereum. But we're seeing these apps come out. So Voltero was another one that launched this week. At the moment, the interest rate is very low because of the DAI savings rate. A few things going on with Maker there. There are other coins where you can get high yields. But when this goes back up, and historically it's been around that 7 or 8% mark, when you tell your friends that you can download this app and get 7 or 8%, they don't even know they're using crypto, and they can see this money that's ticking up higher. There's going to be a number of these apps come out in the coming months, and that's what I'm very excited about. Now, DeFi hasn't been without its issues. This was Pegnet, who we only interviewed last week, that actually got hit by a 51% attack. $7 million of stable coins got... You can think of this as a 51% attack, but they didn't actually dump those tokens. So you can think of this as Pegnet to some degree saving this hack from happening. So as David Johnson says here, another milestone in history, being able to repel the first attack that happened, and they weren't able to dump all these assets, these synthetic assets that they generated. So watch that Pegnet interview with David if you want more information, if you haven't seen that already. Carver is another DeFi app. Framework Ventures bought 4% of all circulating tokens. This is one that I didn't own. This was a IEO on Binance, the way it launched, and there's a lot of tokens that are still held by the team. I think it was 60, 70%. So they're the sort of projects where I'm a little bit cautious, where there's a lot of supply that's still to come into the market. But great to see more DeFi products getting recognized by the big end of town, and that's where I've said that money is going to flow from. Ethereum smart contracts up 75% to almost 2 million in March. This is where the majority of the innovation is happening. We've got our monthly Ethereum update next week as well, so tune into that. Another positive news story. So after that hack that we saw last week, the hacker actually returned the stolen funds. Now, believe it or not, he didn't have all his privacy settings. I guess you can think of it as shielded, because the team were able to work out who he was or where the attack came from and basically say, look, return the funds or we're going to tell the authorities who you are and press charges. So good to see the money being returned there. Dharma is another very cool app. This week they launched social payments. So if you know someone's Twitter handle, you can send them money. These are the sort of things where you don't realize you're using crypto. The Ethereum name service is another one where you can just send crypto to someone's name, a human readable name. Very, very cool watching all these apps come together, and the DeFi Legos, as we call them, all these things are going to be built into the best apps very, very soon. So you won't see those long strings of addresses anymore. Another SDK, so software development kit being launched, making it a lot easier for people to work with all these different apps in the DeFi space. We need to make it easier because there's some fantastic ones out there at the moment. Zerion is another project that I do want to get on the channel because of how much good work they're doing in the space. And the number of Ethereum tokens that are changing hands, we did see another big spike this week. Now, traditionally, these spikes have marked bottoms. But we've seen the addresses. We know whales are accumulating. Let's just zoom out a little bit there so you guys can see that better. But when we have these big capitulations like at $80, a lot of tokens change hands. And who's buying there? Well, it's strong hands. So whether or not that marks another bottom and we head up, Ethereum did have a very strong week again this week. DYDX have generated $1 billion of loans over the first year. They've had some very attractive interest rates, higher than everywhere else at stages, because of the way that they need those stablecoins for margin trading. Now, A16Z is one of the best crypto funds in the space, and they have got behind DYDX early. I spoke about this project over a year ago because of how excited I was for decentralized margin trading. And sure enough, they've launched their Bitcoin perpetual contracts. So with all the issues we're having with, the BitMEXs and whatnot of the world, decentralizing the future is very exciting to see. So that's the first product they've launched. Only 10 times leverage at the moment. A year or 2, 3 from now, hopefully you can do that. Every style of leverage trading you want directly from your hardware wallet, all on Ethereum, very easy to do. And then your funds not risk of being hacked in an exchange or whatnot as well. Coinbase have emerged as a major DeFi contender. So they've launched Price Oracles. And the first question I got from everyone was, is this a competitor for Chainlink? And the answer is no. I think what we'll find is Coinbase will end up being another price feed for Chainlink that aggregates all the different price feeds there. But Coinbase and Brian Armstrong are very bullish on Ethereum in the DeFi space. Crypto industry divided over whether or not to introduce these circuit breakers. So just like we've seen in the stock market, when we have these big falls, the market closes. I don't think we should even be having this discussion because it's one of the beauties of Bitcoin. If you want it to go up 1,000% in a year, you've got to take these days where it falls 10%. There's no way on earth we should introduce circuit breakers. And if you introduce them on exchanges, just because an exchange stops doesn't mean that the decentralized exchanges are going to stop. They're going to have a different price. So look, that discussion, I don't know if it's ever going to get anywhere. Good news for Cardano. They've finally launched their mainnet wallet, Daedalus. There's a lot of issues with those early iterations of that wallet, but I believe it's a lot better now. Cardano, staking, these are the projects that are being spoken about a lot. So Tezos has surpassed EOS, but any of these projects where you get a yield, that is what's getting people excited at the moment. And Tezos has got really high rewards with their baking. That's all the, flavor of the month at the moment. That is one of the reasons why I think, Ethereum 2.0 is just another reason to be bullish on ETH. On top of DeFi, this staking, this yield, and we've had a calculator come out this week. So if you can get to that 32 ETH, this is the sort of returns that we're talking over a 10-year period. Your 32 ETH would turn into 120 ETH. That would be worth from 6,000 up to 24,000. But that's with ETH at $200. I think in 10 years' time, hopefully ETH's going to be a lot higher. So that is just a recipe to attract investors that want that yield. Now, if you can't afford your 32 ETH, there are going to be projects like Rocket Pool that we interviewed, and I'll do a bit of a walkthrough for members and maybe even on YouTube how to do that, how to safely join a pool and stake your Ethereum if you can't get the 32 yourself. Now, when we move to proof of stake, a lot of those miners are going to be unhappy because their mining hardware is going to be obsolete. But Vitalik's come out and said that it could actually be really useful for solving these computationally intensive zero-knowledge proofs that are being integrated into Ethereum and second layers and whatnot as well. So we want to keep those miners happy. In terms of mining, the last few stories here are all about the halving. So we've got some big companies coming out. This is an area that's now competitive compared to China having the monopoly with Bitmain. So $100 million IPO in the US to produce these chips. eBang is the name of that company there. But the mining is starting to get in the headlines. So this is Bloomberg. It gets set for Bitcoin's halving and what it all means. We know Google searches for the halving have just surpassed all-time highs. About 3 weeks to go. Look, I think excitement is going to build up. Now, for me, it becomes all about what the stock market does and these Wall Street products. So Backed has been a massive letdown in my eyes. If you disagree with me, let me know why in the comments. But they promised the community fully backed Bitcoin products to stick with the community ethos, and they pivoted to cash settled products. Another CEO has stepped down after 4 months, and look, they promised the crypto community the world, and they've really done very little at this stage. So I'm all for the real products. I don't want investment products that are like the ETFs, the gold ETFs that aren't backed by enough real gold. Okay, we want real Bitcoin being bought. So let's have a quick look at the charts. Bitcoin has just sort of been meandering higher, not really on convincing volume. I've looked at all the different exchanges. Look, Binance has probably caught a bit of that volume off BitMEX at the moment. There's a bit of a reshuffling of where traders are going, but I'm still not convinced that this rally isn't going to have some sort of rollover with the stock market. I think we have to look at other markets, oil, the soft commodities that I spoke about, that thread that Raul put out. A lot of money's, going into gold. I'm watching the bond market in particular for where stocks are going to go next. And after this, I'm going to do a write-up for members, hopefully have that out tonight, about what I think the stock market is going to do and the clues that we can get from the bond market. So just a quick look at Ethereum. As I said to you guys before, this was a perfect kiss of that 61.8%, and as long as we held that golden zone there, I was bullish on Ethereum, and we've had a bit of a rocket high the past 2 weeks, and Ethereum did have a good week again, breaking that downtrend on the daily, and then it's been pretty strong from there. So look, it's exciting times. I couldn't be more bullish long term. We're just looking at those correlations, as you guys know. I hope you've enjoyed this week's update. Don't forget to head over and join us in our members area. Take advantage of all that free content on our website, guys. And I do look forward to talking to you all again soon. So please smash that like button, subscribe if you haven't already, share these videos with friends and family, and I will talk to you again soon. Cheers.